Morning everyone, Paul Duncan here with GammaEdge. It is Wednesday, the 16th of March. So today's a zero DTE day. When we look at the structures, we can see actually we've had quite an emergence of positive gamma here. We've also seen a reduction on the net negative gamma, and I think that's interesting because now we have more of a balance. So when we take a look at the SPX, the SPY, the Qs, and the IWM, you can see the IWM is still decisively bearish, and if these puts are monetized today, we could get a push upward, which is something to watch for. You can see that we're right at the zero for the IWM. The Qs are sitting right at the zero also. We're in between what we call the goalposts. We have a little bit more net negative gamma coming off than we have positive. So again, watch for some monetization. Everything to the left of the dot is currently OTM, so there isn't any immediate pressure for these to be monetized. Same thing over here on the IWM, by the way. When we take a look at the SPY, you can see we're actually we're above the zero, and we're in the positive gamma area. So this area where the solid dotted line occurs, which is the green line at 430, is going to be an important level for today, and we want to keep an eye on that. If we are moving higher than the 430 level, everything to the left of it will be in the money, and because it's the SPY, most likely we'll see some monetization. Remember, when we monetize calls, we have a dealer response or presumed dealer response of reversing and putting downward pressure. Again, all of the net negative gamma is out of the money and probably will not be a major factor today. Over here with the SPX, you can see we're transitioning up into this positive gamma region. You can see a real key level here at 4,300. We're probably going to open today at the 4,300 level, and that's going to be fairly significant. Although it's a cash settled index, if we continue north or higher in the strike levels here, we're going to see a lot of in the money calls, a lot of out of the money calls, and the balance is clearly going to shift towards possibly locking in some profits. Don't forget though, today is the FOMC, and so we do expect a little bit of fireworks going forward. The market model in general, at circle 1, showing we're still in this longer term downtrend. This is a lagging indicator, but just be aware that we are in this long-term downtrend, and if you are going long in anything, have the expectation of being in there fairly short. We did have a reversal on the cumulative tick out of the open yesterday. That typically does not indicate a sustained reversal. Normally we like to see that in the middle of the day, but this was, you can see, positive slope upward, and we did finish at circle 3 with a higher high on the day than when we started. I've seen these prone to failure, hence we're going to color this yellow and green, but we've got to see a continuation pattern to the upside here to have any confidence of going long. When we take a look at the ES has moved up overnight. It is now over the negative gamma level, and this is the combo, by the way. This is both the combination of the ESH, which is the March expiry, and the ESM, which is the June expiry. The fact that we're above this 4,300 level shows that 4,400 is within range. I do note that we're between this dotted red line and the yellow red line, which are our transition zone. So we're squarely in the middle of where the market pressures could move us pretty rapidly in either direction. But I do look for 44 and 4,300 as being the key levels to watch today on the ES. VIX has dropped overnight. The level of 28.51 is a great decrease, and it's going to open up the possibility of playing that side. Where's the edge? And when we take a look at all of the changes in the overnight structure, or yesterday's structure and the overnight structure on the ES and the other indices, we're not seeing a clear edge here. We still stand by what we said yesterday, that we do have a longer term upside bias that we called yesterday. But the structure change yesterday does not give us convincing data either way. You can see we have fat tails on both the high side as well as the low side, and not a real exciting mean over a limited number of observations. I think there were like 250 or 300 observations here, so not a great edge either way. The vol-vol and the VIX are showing we at circle 1, vol-vol has dropped. We are still within the bar yesterday, so an inside day was printed yesterday. So volatility is not necessarily dropping. It is now consistent 2 days running. Should be just aware of that. It is below the 20-day moving average on the Bollinger, etc., and we are above the 2.0 or 1 standard deviation, excuse me, which is the blue line that you see there. Any dip into that, you can look back in history and you can see that's usually been an interesting area for evaluation. On the VIX, we did drop below the 30 level, which also is more or less the 20-day moving average. And that's important too, is that as vol comes out, we have the potential of seeing a short-term rally. Nothing here, again, suggesting a longer term. When we take a look at the PM and the AM complexes on the SPX, we are seeing still a fairly high expected move. This is open, high, low, close. This is a very conservative value. So personally, I look to put my strikes outside of the levels that you are seeing here and sell premium on either side depending on the direction that we're going. And I will note that we still have this huge dominant level here at circle 2, which is where we now have minus gamma exposure, call open interest and put open interest. This is really a huge line in the sand, and I think that is very, very safe below that level. When we take a look at the 0 DTE, a lot going on in this graph, but I just want to highlight a couple things. Circles 1, 2, and 3 are showing that we are in a net positive expiry for today. This is the first time in a long time. Circle 4 shows that in play for today, we do have some gamma expiring at 4150 and above. You can see a transition zone sitting here at 4225 or so, and then it resumes back up here into positive gamma at about 4255. We're probably going to open right here at 4300, which is positive gamma for the day, for the expiry, and the dominant call open interest is up here at 4385. Very likely that we could continue to push, and if calls are added to the structure today, we could see a push upward, and then as calls are monetized, we could pull back, and who knows how far south if we do pull back we would go. But I do think the 4150 level as well as the 4200 level are going to be well within a liquidity area of being able to hold us. When we take a look at the expiration profile for today, significant increase in net negative gamma for Friday's expiration. This has jumped quite a bit from yesterday. When that occurs, we've got a lot of puts that have been added to the overall structure, so just be aware of that. And then finally, on the SPX, this is a little different presentation. This is after today. So circle 1 shows that I've got one tile turned off here. This removes today's expiration and says basically where are we at the end of the day and into tomorrow. Using the data that we have today. So circles 1, 2, and 3 show an incredibly net negative gamma condition overall. So a lot of red on the charts. So key levels, as I said, 4,000 to the downside, and you can see the call open interest, put open interest, and that minus gamma level that I was talking about earlier. To the upside, we're going to open up here probably at circle 4, and that could open up the path to 4,400 as you saw earlier. Not saying we're going to go there, but just be aware that it exists. A change that you should be aware of that just the ice may be thawing a little bit is we're starting to see the emergence of some deltas, net positive deltas within a sea of negative deltas. This is a change from yesterday. I would urge everyone to go back to yesterday's presentation or yesterday's video, take a look at that. It was a sea of red yesterday. We're starting to see some thawing. So the complex is moving up a little bit, and when the delta complex moves up, we tend to move in that direction. Not always, but be aware that it's there. So that's it for today. Join us at www.gammaedge.us. That'll take you to a Discord sign-up page. You get 14-day free trial, everything turned on. Great group of folks there, and would urge everyone to come kick the tires and see if we can improve your view of how the markets are performing. Follow us, of course, at GammaEdges with an S on Twitter, and if you're watching this off of YouTube, Please like and subscribe to our channel. It helps us in the search engines and helps you be able to find future videos. So thanks everyone. Have a great day.